Hello, this is Saurabh Bhalerao, Associate Director, BFSI Research at Care Ratings, speaking on the monthly life insurance first year premium numbers for the month of October 2023. Following the robust growth in 23, first year premium numbers in financial year 24 have been moving in a subdued manner. For the month of October 2023, they witnessed an increase of 7.6%, breaking the fall observed for the last 3 months. Despite this improvement, the performance still compares unfavorably against the growth of 15.3% witnessed in October 2022. The private sector has played a mitigating role by counteracting the dip in LIC premiums. Furthermore, the year-to-date FY 23-24 premiums reported a drop of 10.5% compared to the 37.4% growth reported last year. The year-on-year decline can be attributed to group premiums, primarily single and LIC. Other factors contributing to this decline include a substantial reduction in group premiums, particularly attributed to LIC, the introduction of a new tax regime, and the significant momentum experienced in 2023. While private insurance companies have maintained growth, their pace has been comparatively subdued. Furthermore, larger private sector companies witnessed better growth compared to the smaller counterparts. Compared to LIC's fall, private sector companies have continued their growth momentum. Especially the larger ones, have broadly increased their market share, while LIC, which has maintained its market share last year due to group single premiums, has been losing share in FY24 in consonance with group premiums falling this year. For the month of October, LIC witnessed a fall in both group as well as individual segments in contrast to the private sector, which has maintained their growth rate. For year-to-date FY24, while private sector companies have continued their growth momentum, LIC reported a fall in group premiums and eked out a small growth in the individual segment. First-year individual non-single premiums of private companies grew faster than industry. Meanwhile, LIC's numbers remained flattish. Private companies in aggregate have a larger share of this segment. Furthermore, even the larger 5 companies put together have a higher share than LIC in this segment. For the month of October 2023, LIC's first year individual non-single policies grew faster than the private companies. Meanwhile, for the same month, mixed trends can be observed in ticket size. Large private companies grew faster than smaller private companies, while LIC witnessed a fall. LIC continues to have a significantly smaller premium per policy compared to the private and to the overall industry. Furthermore, while non-single premiums are led by private companies, the share of single premium has moved up to 51.3 for private players for the month of October 2023. Hence, larger private companies source a larger share of their premiums from single premiums compared to the smaller companies. On the outlook, last year, LIC, other private sector insurance companies exhibited significant top-line growth attributed to factors such as it being the first full year unencumbered by COVID-related constraints and increasing non-par segment during the last quarter of financial year 23, along with the rise in term plans. After this strong growth, LIC's industry has witnessed an overall slowdown over the current year. This fall in performance can be attributed to customers purchasing insurance policies in March 23, right before the implement of the budgetary changes and deceleration in group business. The insurance enterprises have been strategically adjusting their policy portfolio to promote growth, albeit at a more measured pace in the current fiscal. Further, the companies would have to increase their operating tempo as they would have to sell more policies to generate similar premiums. These high-value policies have become comparatively unattractive due to the new tax regime. Despite these short-term fluctuations, the overarching growth potential of the segment remains resilient. This is substantiated by several factors, including the existing protection gap within the market, a regulatory framework that fosters industry development, and a sustained necessity for insurance provisions. Considering these factors, CareEdge believes that the long-term trajectory for growth in the life insurance sector continues to remain positive. Thank you.